Anand, the story of the last 10 days has been the $2 billion of flows which have suddenly come in from the FIIs. What do you think in their eyes might have caused this changing and recalibration of the underweight stances that they have been running since the start of the year in India?
I think, it's been driven less by India-specific forces, more than the fact that in the last 2 weeks we've actually seen a reversal of flow into ETFs of emerging markets. And, obviously that will mean that some money will come to India. Whatever I have read or seen seems to suggest that actually India has seen less of it than its share that should have come in, actually come into the Indian market. So I don't think that there is really a reversal. But given that there is a move towards, as they say, putting on risk and therefore moving into emerging markets, the ETF flows have likely, dominated this move. So
do you think that it could be one of those fickle moves? Because during the course of 2011 we've seen 1 or 2 weeks spells where we've seen flows come in, but then they have sort of petered out and they've not been durable in terms of turning the corner. You fear that this could be one more of those patches?
Well, the argument that seems to be catching momentum right now is that the worst is behind us in terms of interest rate hikes, both especially within India and perhaps in most other emerging markets. And in the case of India, that inflation will perhaps ease off, and therefore the need for the central bank to do anything more is not compelling. If you were to take that as a base case assumption, then you would start looking for stocks to buy, because then obviously there is some potential of margins easing off in the next 6 months or so. Margin pressures easing off in the next 6 months or so. So from that point of view, it looks like that's becoming the consensus mode, that the second half of the year will be much better. However, if you look at what's going on around the world, that commodity prices are again coming back, because dollar appears to be again weak, and as I believe that the European crisis is not yet over, you'll probably find that you will go back into gold. Oil is again showing signs of going up after the dumping of IEA, and we are likely to see an upward pressure on even things like grain. So I'm not necessarily in the camp which believes that commodities have done their jig. And I think, if the scenario is that commodity prices come down, then certainly one should be looking at it. But I'm saying that, the jury is out yet for me.
The other trigger which got discussed 10 days back was that the government was slowly beginning to act again, starting with the fuel price hike, and now more will follow because it's in a corner leading up to the monsoon session of Parliament. In your eyes, could that be a turnaround trigger for the market?
I think, for the market to depend on the government to do things is in my view somewhat a risky strategy. If you look at the euphoria that surrounded the coming of the re-election of the current government, if you remember, the market went up in a major bust on the assumption that now that it was not fettered by the left, it would be able to make a lot of policy changes. 2 years have gone by or more, and we have not seen any policy changes. Given that it is right now in a corner, as you mentioned, it is very unlikely that there can be major changes in the policy. And anyway, the kind of policy changes that are being debated, in my view, are not necessarily those that can drive markets up. They can drive stock prices for a few sectors, especially, for example, retail. But in my view, they have no actual impact on the overall economy.
What do you make of all this noise which is hampering some key stocks in the market in terms of scam probes, etc.? Reliance is a case in point. Sun TV is another which has been under pressure over the last many weeks. Do you see these as opportunities, or do you think this noise can actually put off serious investors?
Well, actually, if there is a serious investor, he should be very encouraged with this kind of investigation, because if you actually were to look at the law being enforced, there cannot be anything better than that for a serious investor in the markets. That said, will it affect the particular companies you mentioned adversely? Quite possibly. However, there is likely to be a change in guard in the Supreme Court, I think, sometime later in this year. And with every new incumbent comes a new kind of policy thrust. So I think you may find that many of these cases may not actually come to fruition.